Okay, here we are again. Bitcoin is struggling to hold on to that 20,000 level right now, 20,475 as I look on my screen. And we are getting more and more and more liquidations as we've got the Celsius liquidation, we now got the 3 arrows liquidation, and it just feels like the dominoes are falling one liquidation onto another, onto another, onto another. And this is creating fears that this may be a very, very, very long bear market. So today it's Friday, and we've got some of our best friends, some of the smartest people on the planet, discussing how long this bear market's going to last. Is it going to be a short bear market, or is it going to be one of these 5-year long bear markets? That's what we're going to be speaking about today. And whether or not you should actually be buying this dip, because forced liquidations may be the best time to actually be buying. So Friday banter, here I am, COVID and all. There's no one else in the studio. They're all very scared of being around me, but I'm here and I'm bringing you a big banter. So let's get the show. I mean, could we not decide to blow ourselves up at a time where the stock markets are running? So at least we'd have the cushion of the stock markets to carry us. Did we have to blow ourselves up on the back of probably what is the worst macroeconomic environment and the worst macroeconomic conditions that we've had in many years? I mean, could we not have picked a better time to blow ourselves up? Anyway, welcome back, guys. I'm Cryptoman Ran. As you know, here I am with COVID, bringing you our Friday banter. Remember that our Friday banters are brought to you now by NordVPN. I have said to you guys before that, you know, if you are in crypto, you have to have a VPN as part of your security. It's the basic security. It does mask your IP. It hides where you are from, which makes it much more difficult for hackers to know where you are. It also lets you browse the internet anonymously, which means that no one knows who's browsing and where they're browsing. And of course, if you are restricted from certain websites in certain countries, a VPN is a perfect solution to do that. On this show, we have an amazing deal for you guys. If you do sign up using the plan, I think you pay, let's have a look. I think you pay $3 a month, $3.83 a month to secure yourself. So you should get this. They also do bring you our Friday banters. They make this all possible. They're the guys that give us all this love. So yeah, let's do it. They are our VPN of choice. And today is a big banter. Sure, big banter. It feels like everything is collapsing. And let me tell you, no matter who you are and how long you've been in crypto, I think that this is the worst that I've ever seen. I don't think anyone could have imagined this. And I want to bring on a friend of mine. You all know Vinny very well. Vinny's a big OG in this space. Vinny, is this like way worse than anything that you anticipated?
Yes, but we are going to make it.
What makes you so confident? What makes you so confident? Because I mean, this is like crazy.
Okay, so look, this is part of the crypto cycles. We've had these before. We'll have them again. It is the worst because there was no bounce really on the way down. There was, I guess you could argue that, you know, October, November was a bit of a bounce last year, but it was really a downward slide. The issue here is the correlation to the tech stocks, the Fed raising rates, and literally like the liquidity issues we're seeing right now, where basically, you know, all these big guys are getting liquidated. It's just been
it's cascading. It's cascading. The liquidations are cascading.
That's what it is. It's just the worst. But you know what? We've seen worse. Now, it could get worse. Okay? It could get worse. And getting worse would be Bitcoin losing, I'd say 19K support, 20K down to 19. And if it drops below 19, we're going to be in a long, cold bear market. Maybe 2 or 3 years. I don't think 5 years is I think that's a nice.
Okay, hold on. Before I want to get into that. Just a reminder to all of you guys. I forgot to tell you guys, please smash the like button, because that's what tells YouTube algorithm that we're here, and it gets us content out there. If you're not subscribed to our channel, subscribe to our channel. If you are subscribed, unsubscribe, resubscribe, and hit the bell notifications, because then you'll know when Sheldino Tentino is going live with his trading shows. He goes live, he trades. He's so far got 6 out of 6 profitable trades, so you kind of want to be following him live. Let's just bring in the other 2 guests before we start talking about how long this bear market. We got Mike Alfred with us. Mike has been pretty vocal around Celsius for a long time. In fact, if I remember, I think I've got a tweet of yours from about a month ago, and I think you were vocal way before this tweet, but you came on a month ago and said the next Terra Luna blow up is almost certainly Celsius. Celsius may be the most irresponsible company in the crypto. Given how much money they lost in Luna, where else do you think they're hemorrhaging your capital mining? Do you really think they have all the Bitcoin they claim? So and I think this is one of your later tweets. Am I right? This is not one of your early tweets.
Yeah, I mean, I started talking about it in Twitter Spaces. I don't know if you remember last kind of June when Twitter Spaces was coming up, and I would bring up Celsius and BlockFi. And a bunch of the people in the rooms wouldn't even know who Celsius was. They knew who BlockFi was. But I think Celsius essentially was gambling with retail deposits. And a lot of people want to give Alex a free pass on this. I think a lot of people like Alex personally. I find him to be a total scam artist. I was very aware that he knew that what he was doing was wrong, that his association with criminals, fraudsters, et cetera, told you that there were going to be huge issues here. And so it's not surprising that it blew up. It was sort of kind of predictable. And a lot of people knew this was coming.
Well, those are quite like big allegations. Criminals use the word criminals, use the word scam. So I think we're definitely going to dig into that. I think we're also going to talk about the macro environment. And that's why we've got Jordi here. Jordi is our man that looks at macro. We now had the Fed increase by 75 basis points, which I think is, I don't know if it's unprecedented, but it certainly was unexpected. Or was it expected?
It was expected just a few days before because, the Fed has this. They have their 1-2 favorite reporters, and one of their favorite guy, the Wall Street Journal guy, Nick, he just put it out 2 days before. And once he puts it out, it's almost certainly going to happen. They have their way to spread the information if they need to. But look, I mean, they had to do it once we saw CPI last week come above all-time high, really. 8.5 was the previous one. We got 8.6. It's the highest in 30, 40 years. So they had to really do something outrageous, which was the 75 bips. I don't think they're going to keep, doing 75. You quickly destroy the whole economy once you do that. So I think they're front loading. Everyone's panicking, but I think the worst is kind of arriving. Maybe it's not behind us, but it's getting close. It's getting very close.
All right. So today we're going to talk about we're going to talk about the Fed, and we're going to talk about the path forward for the Fed. I think we have to talk about Celsius, and we have to talk about the cascading liquidations that have been caused. And I think a lot of them were caused by Luna. I think Luna was the one that started to bring the tide out, and now we're seeing who's wearing clothes and who's not wearing clothes, or who can swim and who can't swim. And then I think, look, let's talk about how long we think this is going to last. I think we've all been here. We were all here in 2017. I think some of us here were here in 2015. We know what a winter feels like. We also know how long these winters can last. I think that's really what we want to try and cover today. Let's start off with Celsius, and I'm going to look at you, Mike, because you've had this review.
Sorry, can we just start off with understanding the underpinnings for why this whole system was how it was built? Because I think some of the viewers may want to understand how these things pop up. So let me start with a quick sort of viewpoint here. When we started with Bitcoin, to be fair, is a self-custody asset, the first of its kind. You can buy Bitcoin, you can hold it in a wallet. You don't need to give it to anyone. You can self-custody it, right? And then everyone started getting very clever and saying, oh, okay, well, we have these new types of blockchains. We have smart contracts. We can wrap Bitcoin into another, into like WBTC. You can stake it on an exchange, or you can put it into a contract. You can earn interest on it. And we started building basically the financial system in crypto, the world as it is today. And Satoshi created Bitcoin because we know the financial system is broken. And so we basically moved away. We moved from a world where there was no counterparty risk with Bitcoin to a world where there's a lot of counterparty risk, whether it's Luna, Celsius, etc. Because instead of trusting in Bitcoin and what's there, you're now trusting in the other extreme. You're trusting in Alex Mashinsky or Kwon, and maybe one or two people in his group to make decisions around your money. And when everything goes to shit, you basically can't get your money out of the system. And so we've gone from one end of the spectrum to the absolute other end because
what a place to lose Vinny.
And so it's very important, and I can see Mike Alfred smiling because he loves what I'm saying. It doesn't, but let's just temper it. Bitcoin's also got its issues, but the one thing about Bitcoin, which I think is really solid, is if you own Bitcoin in your own wallet or in your own vault or wherever it is, no one can take it from you. The moment you give it to a third party and you borrow money against it, or you try and lever it up, you're basically taking on something which is called counterparty risk. And I discussed this on the last show about 2 weeks before Luna collapsed on this show. And I told people that crypto is risky by itself. The moment you start adding additional risks like counterparty risks to your portfolio, you are compounding risks, and that will not end well.
Here we are today. Fast forward a couple of weeks. Here we are today. Mike, you've got strong views about what happened to Celsius. Maybe just let's walk through your views. And I think a lot of people are watching this and they're thinking, Alex is a friend of the channel, was a friend of the channel. Very much so. He came on here many times on Friday Banter, and people may think, oh, we're turning against Alex. We're not. We had to face the truth. We had to bring the whole truth, nothing but the truth, as it emerged. And so I think that's why we got you on the show, because we know you got very strong views. And to be honest, you were right. You called it a long time ago, and it now happened. Whatever you said happened exactly. Walk us through what you think happened and where you think this thing goes from here.
So first off, I just want to say I agree with Vinny. Not your keys, not your coins. You should definitely withdraw your Bitcoin from these lending platforms if you haven't already. I don't know what happens with BlockFi. I don't know what happens with Nexo. You just saw Babel Finance froze. This won't be the last time you hear about this. This model was flawed from the very beginning because these yields were too high, right? If you have real yields in the normal TradeFi economy at 0%, 1%, 2%, and then you see somebody offering 20% or 38% like Hex, it's almost certainly a scam, right? Because there's no way to generate those types of yields sustainably. So from the very beginning, like you just do the basic sniff test and you look at the model, and the model made no sense. Then you look under the surface and you see that this is a company that had been fired from multiple tier 1 custodians, where the board of directors said, no, we don't want your billions of dollars of assets because you are too fucking risky, right? Because you guys are taking way too much risk. You're dealing with the wrong counterparties. I mean, they literally were dealing with the worst actors in the entire crypto space. They were lending money out. They're putting money into DeFi protocols that were completely unproven. Their CFO was arrested for associations with a previous crypto scheme in Israel run by a fellow named Moshe Hogig, who did another pump and dump scheme with Alex previously. Alex was fired from his job as the CEO of Novotel Wireless in 2014, 2015. When I met him, he told me at a dinner that he had just recently purchased several $1 million of Qualcomm call options, and he suggested that I buy the stock. The stock went nowhere but down for the rest of the year. I don't know how many millions of dollars he lost on that trade, but it really got my attention. This was 8 years ago, and it got my attention. Here's a guy who loves risk, who loves to take too much risk, and he was willing to gamble with retail deposits. These are shadow banks. They're essentially unregulated shadow banks that take advantage of a regulatory loophole because they don't accept USD. Very similar to Binance and other companies like that. So it was a shit show from the beginning. Again, I feel bad for anybody who lost money. I don't celebrate this at all. I think this company is going to get put into receivership. I think it'll go into Chapter 11. The assets will be locked up for a year. People will be lucky to get 50 cents to 80 cents on the dollar back if they're able to liquidate some of the assets stuck in those DeFi protocols like ETH on Aave and the mining business. The mining business, by the way, was the biggest red flag for me because I'm on the board of a publicly traded Bitcoin miner. I know the business really well. When they put out an S1 about a month, five weeks ago or whatever, and said they were going to take a mining business public, I said, oh my God, this company is going to collapse, right? Nobody in their right mind who is rational would ever do that. It was completely idiotic.
Okay, so what's currently happening, what happened was Celsius took people's coins, invested those coins into DeFi protocols, loaned them to not great counterparties, etc.
And put them into a liquid mining business potentially.
Okay, first thing that happened was we had the Luna collapse. No one knows how much Celsius lost, but we know that Celsius lost money in the Luna collapse. Badger DAO was the next one. A couple of other DeFi protocols also go down. Stakehound also go down along the way. Then you get the ETH DPEG, the staked ETH DPEG from ETH, and that seemed like it was the nail in the coffin, where staked ETH started to trade at a discount to ETH, an aggressive discount to ETH, 6% discount to ETH, right? And that was
it was a nail in the coffin, Ran. But let's be honest, like they had blown multiple holes in their balance sheet well before that, and if they hadn't been able to raise that equity round last year, they were technically insolvent last spring. That was basically a bailout, right? They blew at least a $40 million hole in their balance sheet just in the drawdown related to bad counterparties. And then they kept compounding the error. They kept losing more and more money. They were essentially a gambler in Las Vegas who keeps going back to the craps table, right, or the roulette table, and keeps throwing down 100% of the capital, hoping they can double up really quickly to earn back what they had lost. But they were doing it at institutional scale, again, with retail money. Absolutely despicable behavior. And if there isn't fraud here, I'll be really surprised.
Okay, now they claim that they're working nonstop, focused on your concerns, and the community is strong, the strongest community in the world. This is a difficult moment, and we're working to get this back. They now said that they are working with Citibank. I think they appointed Citibank to help them get out of this mess.
Because they're experts in crypto, of course.
Yeah. So let's first, do we think that Celsius is insolvent, or do you think that this is a liquidity crisis?
It's both. So I think they both don't have all the money that the depositors had put in the company, and in the short term, depositors want their money back and they don't have enough liquidity because they put the capital in too many places where it can't be withdrawn now. So it's multiple problems, it compounded on top of itself, and nobody will. Here's the difference between BlockFi and Celsius. If you really want to put it down to one thing, it's a lack of trust. So BlockFi was inexperienced and stupid, and they got stuck in that GBTC trade last summer. They were technically insolvent, but they preserved the trust of the investor base. So even though the CEO Zach is very inexperienced, he's not viewed as a shady, potentially fraudulent character. Alex crossed the line. He went way over that red line. The investors don't trust him anymore. Not even the existing investors who put hundreds of millions of dollars in are willing to bail him out. And that lack of trust is why this company has no chance of ever coming out of the situation that it's in.
So, how does this end?
It ends with a slow return of capital to investors, potentially over 5 years, because it may take that long to liquidate all the assets. Chapter 11 should freeze the assets for about a year. So no one's going to see any capital out of this scheme for, in my view, at least 3 to 6 months at a minimum. And at that point, it'll only be a partial return of capital. So I'm hoping for like a 50 cents to 80 cents. That's sort of my current estimate. And that just depends on how much worse this DPEG gets. Depends on how long the Bitcoin mining depression goes on. Because look at these public companies. The biggest North American miner is trading at $2, 700 million. It's trading below the asset value, right? So like there's no hope of Celsius getting any of that capital back out of that business without a fire sale. And so investors are going to lose money for sure in this.
People are asking for us to get Mashinsky on. I have reached out to Mashinsky. Obviously, he said his last message to me was, "I'll speak when I can." So, it's not like we have asked him, and he'll speak when he can. Vinny?
So in a situation like this, the reality is that Mashinsky is going to get a whole bunch of lawsuits. So anything he says public right now can and will be used against him. So he doesn't have a choice. He has to stay quiet, listen to his lawyers, and just hope he doesn't wind up in
jail.
In jail.
Okay, so we had the Luna collapse, we've had Celsius collapse, and now we've got 3 Arrows Capital. And 3 Arrows Capital, you could say one of the darlings of this bull market, right? Flying high, thought leaders, in my opinion, very smart people. When I listened to Carl and Suzu speak, they were really smart, really insightful people. And they were also a little bit
synonymous with, I'd say, people. You get smart people who don't live up to their fiduciary responsibility to their investors, and that happens often. And the responsibility to investors should be demarcated in the whatever investment agreement you have. And taking amount of leverage, like it sounds like they've taken into their portfolio, is a breach of their fiduciary responsibility. They took too much risk on the portfolio by the looks of things. You can be smart, and the smartest people in the world make these mistakes.
Mm-hmm. Long-term capital management, it's very similar. Smartest finance people in the world, and they blew themselves up, right? Because one-way bets with leverage always and eventually unwind.
Yeah. And it's not, guys, you must understand, like there is a difference between being fraudulent and being reckless.
Correct.
Okay. So there are Mike will say that Alex is fraudulent. And
I'll say he's potentially, just let's be clear. I didn't say that he committed fraud. I think when they do the full analysis, the accountants and the attorneys may discover fraud because of the amount of nefarious activities that went on in that company. But there's no proof today that he definitely committed fraud. Yeah. I'm just saying the potential for fraud is high in this circumstance.
Jordi, what are your thoughts?
Thank you. Yeah, I will say about Alex, first of all, I know last time I was on the show, he was on, and it was the Kwon blow up. And he was trying to tell everybody, Kwon was promising you 20%, but you have to know how the yield is done. In Celsius, we offer you whatever, X percent. And,
10%,
yeah, and he was explaining to us how his yield is good yield and Kwon's yield is not good yield, which is, I would actually say his is much worse. What we had with Luna was it was public, it was out there, it was in the blockchain, everybody knew how it worked. People like me and other people who actually studied the mechanics realized there is a flaw, there's a leak in the system that just kind of lets the money out. So I think Alex was just trying to go out there and say how safe and how good his yield is. The reality is he is taking asymmetric risk where he's a limited liability company. If things go down, it doesn't matter. Things go up, above the watermark, which is he has a fixed interest rate to pay, 8%, 10%. Anything he makes above that, that's their profit. So they're basically a hedge fund, extra money, which is public money, public people's money, risking it, and then trying to get more than the benchmark, which is 8%. So as we saw, they put 500 million in Terra, in Anchor. they started investing in anything that can give more than the yield they're paying, and hoping that they can generate higher yield. And then, of course, the staked ETH. You mentioned staked ETH. That's a whole other problem because that is a real asset. It's not like a Mickey Mouse asset, but there's a liquidity issue. And they're basically betting at that point that people don't want to take their money out until the merge, which, as we're seeing, is getting delayed.
Isn't it crazy that staked ETH was actually trading 1-to-1 with Ethereum? When you start thinking about it, like staked ETH is not ETH. Staked ETH is illiquid. Isn't it? Now that you see staked ETH at a discount of 5 or 6% to ETH, I'm thinking to myself, wasn't it ridiculous in the first place?
Yes.
So, staked ETH has an advantage over ETH, which is it's giving you a yield, right?
Who's echoing? Vinny, is it you? Are you coming through a speaker or something into the mic?
I don't think so. Was I?
Yeah, probably.
Are you using headphones or earphones?
He's the only one without earphones.
Yeah. So yeah, to me, when I look at it now, I'm kind of like, in the bull market, there are a lot of things that we don't focus on. We don't concentrate on a lot of things because I don't know if we don't want to. I don't know if we're too caught up in the hype. But like one of the things that I miss completely is why the hell was staked ETH trading 1-to-1 with ETH? Makes absolutely no sense. Staked ETH is illiquid. It's not really ETH. There's a risk that the beacon chain won't merge, whatever that risk is. There's smart contract risk on Lido or wherever you stake your ETH. Like, there's no reason in the world that it should be trading 1-to-1. And for the best
I can answer that because it's not that complicated. When you have a liquid asset, but it's paying a higher yield, a lot of people who don't need liquidity, they just say, okay, right now I don't need liquidity. I'm happy to wait however long it takes if you give me 10% more ETH, let's say. So at the time when people didn't need liquidity, it was a fair trade. But once people actually need the liquidity because they're getting margin called left and right, like we saw with Celsius and unfortunately 3 Arrows, then they're starting, they're saying like, okay, I'll take 95 cents on the dollar just so that I can get some cash now. So the liquidity premium ends up becoming more valuable than the yield.
So in the 2018 bear market, most projects never survived to see the next bull market because they blew up their treasuries. Vinny and I had arguments about this back then. I actually said to Vinny, why did you sell all the Bitcoin that you raised for Civic at whatever it was, $2,000 or $3,000? Vinny turned around and said, I'm not a hedge fund. I need runway. My runway is in US dollars. He did the right thing. Many companies blew up their treasury because they held crypto. And then what happened was Bitcoin dropped and then they lost their entire treasury. Bitcoin and ETH dropped. This bull run, we're seeing the same thing because 3 Arrows Capital allegedly managed a lot of big projects, treasuries, promising them that they would get 20% or whatever, 15%. 3 Arrows Capital would then go invest that money in things like Anchor, et cetera, et cetera. This could have done this has probably done massive damage to a lot of companies. A lot of their treasuries are going to be blown up, and a lot of companies won't live to see the next bull market as a result of this, right?
Yeah, that's exactly what's going to happen now. I mean, we're going to see a bunch of, we know this is already happening systemically. A lot of companies had their treasury sitting in Ethereum, sitting in Bitcoin, and
Anchor, Celsius,
and trying to get unsustainable yields. It makes no sense at all. I just tweeted out now that everyone should just remove their Bitcoin from exchanges at the very least right now, and that would probably create a short squeeze because I'm almost certain there are exchanges right now that have got undisclosed like risks, liabilities, whatever, with like contagion spreads in every financial system. Contagion spreads. Jordi just said early on, which actually reminded me of a good point from the Great Financial Crisis. For those of you watching who remember it, the banks basically privatized profits and socialized losses. That's what they did. What do I mean by that? Back in those days, the banks were taking a lot of risk on their balance sheet, and all the profits were going to shareholders of the banks. And when they screwed up the system, the government came and bailed them out. And that same thing is just happening in crypto. These guys operating these businesses or giving high yield, etc., taking your money, put it in, and if it tanks, well, that's your money lost. But if they make profits, they make it for themselves. And so we've recreated the banking system inside of crypto again, and it's going to fail because this system is way more transparent than the banking system. The counterparty risks are a lot more transparent, and we know immediately when something's failing, whereas the banking system, they can hide it for weeks and months. So the good news is the purge is happening right now. I think we may be at the bottom. I'm hoping we're at the bottom. I mean, I hate to see us break through 20K. If we break through 20K on the way down, it creates a whole bunch of systemic risk for Bitcoin, which basically puts the whole industry at risk. The miners are operating at a I think $22,000 of Bitcoin right now for North American miners, probably 18 to 17,000 the rest of the world. So we go down low enough, we have risks of, I mean, we all know the risks of like the block times going longer, etc. There's a whole bunch of technical risks in Bitcoin. We just need to make sure we stay above 20K in the short term and consolidate these levels. And I'm hoping, I'd say 70, 80% confident that this is the bottom, because there's a lot of sleuths out there, crypto sleuths. They know exactly where the money is, and the market in crypto is very efficient. So I think we know who's not wearing any clothes right now. But there may be others. I mean, the contagion spreads. I'm convinced we're going to see a couple of exchanges go under, because they tell you your Bitcoin's in the account. So just people watching, when you log into an exchange and you see, oh, I've got a Bitcoin or 2 Bitcoins, that's their system telling you that they've got a Bitcoin holding it for you. That's not your Bitcoin. Try drawing it out. And if enough of us do that in mass, you're going to find that they may have been short, 5 or 10 or 20% of the Bitcoin, because they take your Bitcoin, they lend it out to these lenders, they get interest on it, they run basically what's called basically fractionalized banking again, because they have a required reserve. They know that only 5% of people withdraw their Bitcoin every week, so they don't have to hold the 95%. Why don't they give that Bitcoin to Alex or 3 Arrows Capital or something?
Keys, not your coins, not your keys, not your coins.
Keys, not your coins.
And look at the people on Celsius, Vinny. Look at the people on Celsius right now still posting screenshots of their weekly rewards. They can't withdraw the money, but they're posting the screenshot as if that's real yield, right? And it's funny, we have to learn these lessons over and over again.
So here's the good news for Bitcoin. Here's my thesis on this, okay? If everyone in the world try to withdraw their Bitcoin right now to their own custody wallets, you will see the Bitcoin price go up, because these exchanges who are running fractional reserves and have got money trapped in all these systems need to go buy Bitcoin to give it back to you live, right? So they have to get the Bitcoin from whether it's another exchange or whatever, and they have to send it to you. So the moment you get beyond whatever the liquidity requirements are, it's a run of the bank. And that could trigger a massive run on Bitcoin that you've never seen.
I'll just since it's banter, I have to disagree with so much of this. I don't know where this is coming from, but
This is why we call it banter. I'm going to just drink my tea here and let you guys.
So Vinny, have the Bitcoin that they claim.
Of course, most of them do. Of course, all the regulated ones, and anybody who's actually responsible by the law, Coinbase, FTX, Kraken, all these guys. I mean, first of all, you can look at their wallets. You can look at the exchange wallets on chain. You can go on chain. You can see how much things, if they're tagged, most of them are tagged. All the huge exchanges, of course, are tagged, especially on certain chains. Maybe not all the chains, but ETH, Bitcoin. A lot of the wallets you can just see here's the exchange wallet. There's a ton of coins in there, and they can meet redemptions. And this no keys, not your wallet. I mean, let's be honest, most people are not necessarily savvy or tech savvy enough to handle, hardware wallets and everything else. There is a distinction to be made between a custodian, who is their service. You are paying them to hold your key, like Fireblocks, Fidelity, all these serious companies. Their job is you pay them and they will custody your coins for you and keep them safe. Versus what we saw with Celsius, which is basically they're paying you, and then sure that you have to ask why are they paying me to hold them, and maybe there's some risk that I'm taking to be paid. So it's a different kind of.
But Jordi, I made the distinction in my tweet. Custodians are fine. I have no problem with custodians, and I actually have no problem with regulated entities, Coinbase, etc. I have no problem with the regulated entities. There are lots of these little chop shops out there that people put their money into, promising them. I mean, there are lots of small exchanges out there that have no liquidity, that don't have funding for their businesses, that I believe are running fractional reserves.
Yeah, if you're trading on small exchanges, that's a different story. Small offshore exchanges.
Yeah.
Now, if it's something like Binance, for people outside the U.S., maybe it's not the worst option, because they have been around a very long time and they're very profitable and they have a very, very healthy kind of, balance sheet at the end of the day. As you go down the list, maybe ByBit's also okay, like very, very successful business. And then after that, maybe a lot of the smaller exchanges. So,
I mean, speaking of ByBit, I think I was shocked to know the size of ByBit. And, to be honest, before we started working with him, we worked very much with, I used Binance, I used KuCoin, I think just like everybody else. When I started using ByBit, A, it's a very cool exchange to use. B, I didn't realize that they, in terms of size, they were bigger. They're bigger than FTX in terms of futures volume. They second to Binance. I think it goes Binance, Coinbase, ByBit, and then it goes FTX. So I think they're pretty safe exchange. But I think I agree with you that now in the bear market, in the bull market, everyone's making money, everything's cool. In the bear market, make sure that you select your exchanges correctly, and make sure that you keep minimal coins on exchanges if you have to leave coins on exchanges. And I do agree with you that for some people, it's actually more viable to keep your coins on exchanges versus losing your private keys, because I think the normal person will
use regulated exchanges. Use exchanges that are licensed and audited. Don't use unaudited exchanges.
Yeah,
with segregated custody, right? That's the key thing. Is the custody segregated, or are you in a big omnibus account with a bunch of other people? And then one other comment too on Coinbase is just it's publicly traded, so you can look at the balance sheet. You can't do that with a lot of the other, even the large regulated exchanges that are private, unless you're an investor in those companies. So it's worth doing. Like if you keep coins in Coinbase custody, you should look at the balance sheet every quarter.
Are we saying that this whole crypto lending thing, this whole, when I look at this bull market was all about DeFi and yield. The way the bull market started with yield farming. Yield farming created more magic money. More magic money created more profits. More profits created more people buying Bitcoin, more people buying Ethereum, and then number go up, and that basically catapulted the whole bull market. Are we saying that these huge yields that we have been seeing in crypto, and by huge I mean double-digit yields, are we saying that that's garbage?
No. No. So let's understand like the basis that actually works, and then let's understand how things are taken to the extreme. Okay. If you take it, go back to basics. If I have one Bitcoin and it's worth $20,000, and I go and let's say I just wrap it for argument's sake, I put a create WBCC wrap, and I've taken some counterparty risk, but it's pretty minimal. And now I want to go and borrow money against it. So I send it to Mike, and he says, "Okay, Vinny, I will lend you $10,000 against your Bitcoin, but I'm going to sell it the moment it gets to 15,000. If Bitcoin drops 25%, if you don't pay me back, I'm selling it. That's called a margin call. And basically, and he said, look, the interest rate's 7%, and it's your USDC that you have to pay me back in. So through a smart contract, we can do this peer-to-peer. We can basically lend money to each other. Well, I can lend money from him. I can give him a Bitcoin security, and I know that the terms of the contract are that he will liquidate it. Now, that's something which works, right? It works well.
Can you generate double digit? What I'm asking here is it possible to get double digit yield?
It's not about the digits. It's about the market rate of interest, okay? And if the market rates for in traditional finance world is 7-8% for a securitized loan, that's fine, right? The moment you're going 15-20%, and it's not being paid to you in USDC, it's being paid to you in some other currency or some other token or whatever else, where is that money coming from? And so you have to be suspicious about these things. And that's why
here's the problem. Like it sounds reasonable, but actually it's that's not how things have been working in the last few years. First of all, when we have like demand for leverage, like we've had during this bull market, which ended, actually you can generate yield with basis trade. People are so bullish on Bitcoin or ETH or whatever it is that they're basically believing that the future price is going to be like per year annualized 20-25% higher. So what you ended up having for the last 2 years before the bull market ended was people were very happy to pay you 10-12% and put on risk-free trades, which was short the future and just wait. It's called the cash and carry. So it's like a basis trade, but you're kind of putting on a future position, shorting Bitcoin at 25% premium and waiting. And then they were able to pay yields of like 15% because they're making 25%. So it kind of messes with us because that was actually legitimate. It was just because of the demand for leverage. It doesn't exist anymore. There's no demand for leverage. In fact, if you look at some of the prices, we are below market value. Like Coinbase probably has like a valuable venture book, they have a valuable exchange, and they're trading at pennies. So, and that's true for like other crypto assets as well now. Like a lot of things are starting to be like very undervalued. So actually there's no demand for leverage. It's the opposite. There's a need for leverage. And one of the unfortunate things that happened, so we talk about like Luna and then 3AC and Celsius as if they're, it's like a chain. It's all kind of like related, right? Like Luna collapsing and people losing money there, it scared off a lot of people. It scared off the lenders. All the leverage got taken out of the system. Genesis, BlockFi, all these people who do unsecured lending start saying, I run a firm, I run a trading shop. They call us up. They say, hey guys, like, you've been a great customer, but right now we can't, we're stopping unsecured lending. So they start calling back everything. Inevitably what happens is like leverage comes out of the system, coins start going down because there's just no liquidity. People are sort of forced sellers, and this spirals into like lower and lower prices. As we saw, once ETH went below 2K, it's kind of what Vinny's said before. Everybody has to kind of start looking at runway, and if your runway's in ETH, well, then you have to start selling at 2K, because even though you were very bullish on the merge, you have to have enough runway to survive, and that price kind of spirals. And we saw two huge blowups, obviously, like Celsius and 3AC, and I think they were both related to losing a lot of money on Terra, losing also money on UST, so both ways. So both of them, if you look at both of them, they had a lot of money in Luna. So Mashinsky, last time we were on the show, he said he lost several $100 million that day of his personal money. So he was clearly like, deep. We know 3AC like led the previous round. So these guys
also bought a $500 million position, allegedly bought a $500 million position of locked Luna, because Luna had a 21-day lock period, while the UST was depegged. 3AC allegedly bought a $500 million position in locked Luna.
No, this is not alleged. This was just a round. They did the VC round, so they put in 300 million. The last time they were locked for 4 years. Kwon had locked up everyone's tokens for 4 years so that nobody could sell. But unfortunately, it still didn't work out. But I think psychology-wise, what we've seen is these guys had huge losses and they chased the money. This is kind of what we see in the poker world. People start losing, they start martingaling because they can't just take the loss. Like, do you want to accept the $500 million loss, a $1 billion loss? You start leveraging, you say, well, it's, I need to get this back. And then you lose 2 billion. And then you say, well, I'm going to go leverage again, 4 billion. And
that's why you have limits on at the blackjack table. You can't bet above a certain amount because the martingale system eventually it works. Eventually.
Yeah. Well, you need to have enough cash to sustain it.
Yeah.
And unfortunately, the belief that with $10 billion you could just mold the market into going into the direction you wanted, which I think worked during, I think last year when we didn't have this macro backdrop and crypto was just sort of trading on pure, greed and also emotion. We were able to see like situations where $10 billion could just rip through the market and just push it up 50%. But in a macro backdrop, what we have now, where equities are getting destroyed, you're buying and we saw this guy on Binance really trying to hold 29K. He was absorbing for days and days. We don't know if it's 3AC or who it was, but at some point the macro environment, once the CPI number came out, just blasted through them, and the martingale didn't work.
All right, guys, I'm going to take a quick break just to thank our sponsors. And then when we get back, I want to talk to you about the macro environment. I want to talk to you about whether we're at the bottom. And then I want to talk to you about the differences in opinion that we have around Solana and maybe even Hex. I see a lot of people here are saying the one yield that is sustainable in crypto is Hex.
This big Friday banter is brought to you by NordVPN. NordVPN is a security product that every crypto trader must have as part of their essential tools. For crypto traders, NordVPN encrypts your personal data, hides your IP address, and enables you to access crypto trading platforms from any geographical location, giving you the freedom to buy and sell crypto completely anonymously. It also protects you from hackers and phishing attacks. NordVPN is super easy to use, offers security for up to 6 devices, and with servers in over 60 countries is the fastest VPN out there. The promotional link below gives you up to 61% discount and a 30-day money-back guarantee on your purchase.
So wait, hold on. I just want to get this straight. Are you telling me that the Hex yield is not sustainable?
Oh my God, this one's ridiculous. I actually just filmed with the new documentary crew. They flew into Las Vegas yesterday to do the highest of stakes. So it's a whole documentary about this hexagons and this cult of acolytes. And it's crazy, man. The way Richard designed it, the scheme is so devious because it looks and feels like a safe scheme because you hold your own keys, right? You kind of mint your own yield, et cetera, et cetera. But it's literally designed to fail from the beginning because it creates no economic value. There's no revenue to the token. There's no profits within the token. All of the value creation comes from new money coming in, which is why there's this huge marketing crew of people. They're doing like billboard ads, right? They're like sending stuff to people's houses. They do seminars. It's like Herbalife for crypto. and the problem is it gets bigger and bigger and bigger. It gets more and more top heavy. And so Richard controls, here's the best analogy, right? There's a thing called Icon Enterprise Partners. What Carl Icahn is this famed financier, right? Billionaire, lives in Florida now in Sunny Isles. And he's got this ticker called IEP, right? And right now it has about a 16% cash yield. So like, if you want to know about a yield that might be sustainable, go buy IEP, don't buy Hex. But the reason why it works is because Icahn owns 88% of IEP and he takes his distribution every quarter in stock. And so the cash yield is 16% to the average holder, but the actual yield that the company is experiencing is 1.9%. It's the same, an analogy for that is Hex, right? Because Richard controls about 90% of all the Hex outstanding because when he did the genesis of Hex, he controlled that original origin address and he continuously looped all of the contributions. So he took out the initial 7 million in ETH that people did in this crowd sale, essentially, right? And he kept buying more Hex because he controlled the origin address. He could keep taking the Ethereum out, buying more Hex. So he got up to 90%. And because all of his tokens are unstaked, he can pay what he calls like a 38% yield to the rest of the pool of buyers, and they have no idea what's going on. And these people are nuts. I saw the sort of trailer for this video. There are like 20 hexagons talking about how the word they use to describe Richard is God, Messiah, right? It's literally a cult. It's a religion. It's going to collapse. It's sort of inevitable just based on the math. And it's really sad. Like these people are going to lose all their money and they don't even realize it yet.
Oh, Jordi, you all laughed. So, Jordi, do you want to contribute?
Yeah,
say
look,
anything? Do you want to?
I will. Look, I've been calling out this shit for a long time. We have to call out the bad actors. We have to, we want to clean up the space. We don't want the space to like forever be like a dumpster of like, these kind of like people. It's kind of it's exactly what was described. Like he basically has been putting on a ruse. He created this coin. He sent 90% of it to himself, but be careful. It's not like this is his public address and everybody can see the coins. No. We have to create hundreds of wallets because it's free. You just create a wallet, click, create wallets and send each of them a little bit. So it looks like this is the most popular thing in the world. Everyone's holding it. They're all his addresses, right? Like this guy's a genius. You start. He's smart. He's devious.
He is,
and he's using his intelligence for bad
Hold
purposes.
on. Can I make a suggestion? I mean, you guys are both smart. I respect you both intellectually very, very much, which is why I get you on the show. What if I brought Richard on a show? Would you guys challenge him? Because he's challenged a lot of people. He's a very smart debater. That's the problem. Would you guys be open to a challenge like that?
I'll say, like, I've seen his debates. He talks to like not super
smart.
Exactly. I don't want to use. Look, he's won debates. Recently, his most recent debate, he got clobbered by Eric Wall. You can watch it on YouTube. He pasted him. I don't know if I have much to add because Eric kind of just cleaned it up. People who wanna watch him debate and watch him get challenged, it's out there. Maybe at some point I'll debate him as well, but I think Eric did a fantastic job and it kind of exposed what's going on.
I'll give you another perspective, and I'm not going to pick on Hex specifically. I'm going to say in very broad, general terms, every single scam, Ponzi, crazy project I've seen over the past decade I've been in crypto has similar attributes. And the attributes I would rank number one at the top of all these attributes is that I cannot find anyone in the crypto space that endorses it. So it's always a project that's on the sidelines that basically has. So when I say endorses, I mean, we've got a lot of OGs in the space, right? So you've got lots like Eric and whoever else. You've got tons of like Bitcoin OGs, Ethereum OGs, etc. When you find these projects that don't have a single person who is respected by the crypto community endorsing it, you have to ask yourself why. Why is it that that this whole space exists as effectively a bubble in and of itself, like a separate ecosystem where there's no crossover? For example, let's use Solana and Ethereum. There are Ethereum people and Solana people who like work together and know each other, right? So there's like, okay, technically they actually argue about the technical merits of Solana versus Ethereum. Vitalik and will engage with Anatoly about that, and they'll have the discussions. And there's intellectual discourse between these projects. But the projects where there's no intellectual discourse between the people who understand crypto really well and the people in this project, these are the ones where I get really, really suspicious about.
Okay. I got it.
People are truth seekers. We're truth seekers. We're trying to figure out how this technology works.
So great. This is a great time to potentially call up this tweet from Mike. It says, Solana risks total failure. The founder of Ethereum is having an identity crisis. Hex is a Ponzi and Cardano is vaporware. Vinny, I know you love Solana. I know it's one of your bags. I know, at Multicoin and on your personal capacity, you've been a big Solana fan. Maybe now's the time to get it out on the table. You've got Mike here who says that it risks a total failure. And I think I actually even have another. He says in crypto. Here we go. I like this. Mike, this tweet of yours was pure poetry, right? It says, in crypto, the best proof of zero knowledge is owning Hex, Cell, XRP, or Solana. There's really no better indicator. Boys, over to you.
Wow.
Yeah. Let's have a debate. Mike, what's your number one argument against Solana?
Yeah, so first off, at the top, I just want to clarify that this is Twitter, guys, and obviously a lot of the things we post on Twitter are fun. And so I don't actually think Solana is in the same category as Celsius, right? It's definitely not in the same category as Hex. I threw it in there at the end because we were all needling Solana because it kept going down over and over again. And, it purports to be like a real blockchain and decentralized, but they keep like shutting it off. But I do have to say that Raj, who followed me recently on Twitter, like I was reading some of his tweets and he's showing a lot of humility recently and a lot of self-awareness. And so like my honest, genuine opinion is I hope it works, right? I hope it doesn't fail because a lot of good investors are in the project. So again, like, yeah, my tweets are funny. Sometimes I do stuff for engagement. I'll put my hands up and say, you got me. I admit it. But I don't actually believe Solana is in the same category with those other.
It's not a scam, right? Like it's an experiment.
Yeah, it's not an outright scam. It's a genuine attempt to create a layer one solution that could improve upon things that Ethereum did. Like Cardano is as inept as Cardano is, it is a genuine attempt to improve upon the system, whereas Hex is literally just an outright scam. It literally tells you we are a scam and we want to take your money.
I would concur with that. I try and explain to people like Cardano is a very long-term research project that probably belongs in a university more than in the commercial world, where in universities they research stuff forever and nothing ever comes out. But it's useful at some level. I'm sure someone will take a derivative of Cardano's research and apply it to a blockchain and win. But like it's like professors trying to build a business. It doesn't work. Like those who can't teach. That's what Cardano is. I think it's an interesting experiment from that perspective.
And those who don't actually have a degree do Cardano.
Yeah, but it's clearly intellectually interesting, but it's not practical. Solana's the other end. Solana's like, look, let's just freaking break things. Let's just go and like Solana does more transactions than every other blockchain in the world combined today. Okay, more than Ethereum, more than everything else combined. It does 1,500 transactions per second. Guess what? They're having scaling issues because the fees are too low and there's a ton of spam on the network. Bitcoin solved the problem by making the block size smaller. Okay, and effectively increasing fees.
And increasing fees.
Yes. So Solana is making some changes this week. It's actually, the patch is live now, where each project has its own space and you compete on that. So that's going to help reduce the spam. But think about the issue that Solana is going with downtime. Would you rather have a chain that has no transactions that never goes down, or a chain that's basically reaching for the sky and doing that many transactions and having some problem with spammers coming in and trying to fix it? I'd rather have the latter than the former as an entrepreneur. I'd rather have a problem where too many people are trying to use my product and I can't keep it up, versus nobody wants to use my product and hey, it's always up.
I think these guys agree, like they're not that far apart. If you look at like what Ari Paul said last year when he was on Up Only, he basically said, we like Solana, but let's be clear, Solana is in beta mode. This is not a nice pristine product. This is just like people are breaking shit. It's falling apart. And at the end of the day, like the thesis behind Solana will succeed or fail. The people behind it, have to do multiple things. This is what we're learning in this cycle. Like you have to do everything from the tech has to work, the BD, the marketing. You have to create a community. You have to have apps that actually are good. You have to have. We talk shit about Cardano, but I love the fact that this community of Cardano is still managing to keep this asset after so many years of being vaporware. I mean, I think there are recently some changes that they're doing to their smart contract. So I kind of on our last show, I kind of foresaw that Cardano would outperform during this period because they do have like a lot of upgrades coming right now. But the reality is Cardano is trying to get somewhere. They're maybe going to get there. But what we see with the community is they have kept the value of this thing at tens of billions of dollars. That actually keeps me quite optimistic about things like Bitcoin and Ethereum because their communities are much larger and, equally intense about it. And if they can keep Cardano at, 50 billion, look, like Ethereum is already at, it's like 100, 200, like 150 now. What is it? And the Bitcoins is like, if Bitcoin goes to 10K, it's going to be like 200 billion. It's not going to be that hard for a community to keep the price up. So the fact that Cardano is still doing okay gives me faith in the bigger coins.
They call him Priest Charles the Priest, because they followed like a religion. All right, we've got like literally 2-3 minutes left. Need to get your views very quickly on the Fed and this macro storm. Jordi, I know you've got a view about how long it's going to last. So I think we all agree that they're front loading. I think their 75 basis point this time was a clear signal that they are front loading. How long is this going to last? Because crypto really can't do anything until the macro clears out. Right? Like I think we need some kind of macro stability. How long do you think that this macro Fed thing is going to last?
And when we just talk about macro, I think Q1 next year is when they put the brakes on and they realize, they have to stop. They've created enough demand destruction that inflation is going to go down. At least the month-on-month inflation. The year-on-year, it's going to take a while because, we had this huge energy spike. So on a year basis, until that comes out of the system, it's going to be like by next summer. But on a month-on-month basis, which is really what the Fed's going to look at, I think by the end of the year, around like Q1, they'll have to pivot. And the markets are smart. Markets are like forward-looking. So they will see that coming. So we don't have to actually maybe wait till Q1. They might already see that once unemployment's going up and other indicators are falling apart, they will foresee the pivot coming, and we might have a positive turn in the market towards the end of the year.
Mike, what do you think?
Yeah, so I mean, right after the pandemic hit, I was saying inflation was coming. Actually, Tushar yelled at me for that. I said, they're going to print so much money. And Tushar's like, no, how are they going to hold up the market? I said, just watch them. The Fed is much more powerful than you think. But now we have that inflation. The Fed's not going to stop raising until the inflation goes away. It's going to run at least through the election. So I agree with Jordi. Q1 is probably a good time. But I also think that the markets could go higher in the lead up to the election, just as people start to price in that, hey, this is going to turn around at some point. So I'm not as bearish as most people are. I don't think now is the time to be getting extremely bearish. I think most of the shit that's hit the fan has already happened. Like if you look at Netflix and Shopify and Carvana and Peloton and all these names that I was lambasting in 2020 because everybody was buying ARK. And I told people you're going to get absolutely clobbered with ARK, at $150. That happened. That's already over. Like a lot of the worst excesses in this cycle are over. The things that are left to get blown up are things like real estate, residential real estate. So like there may be a slow motion train wreck there, even as some risk assets, more liquid risk assets start to go up.
Yeah, I'll disagree with them on the residential housing situation because of all the supply chain disruption. Building right now is taking much longer. So we have supply shortages, and that's going to push at least buoy the prices. I don't think we're going to see a dip in residential. If anyone's trying to remodel a home or build a new home, it's 2-3 years out right now. So
even with lumber down like 50, 60, 70%
that's not the
off the
issue.
highs?
Lumber's not the only component of building. So you're looking at, there's tons of whether it's appliances, roofing, electrical. There's so many components that are basically in short supply right now. Building a new house from scratch is impossible within 12 months. Obviously, like low end maybe you're fine, but at any mid-range house you have to basically buy. And I spoke to some realtors about this, and they're seeing massive demand coming in because nobody can build, no one can renovate. Renovations I've delayed renovations in my house twice this year now. It can't be done. The supply chain is just broken. So I think the Fed's looking at all these things. And by the way, Powell said something to that effect as well. So there are some housing starts that are going to be finished, but we're not seeing a whole bunch of new starts right now. My take on the Fed is that they have lost credibility in the market, and they have to keep raising rates to regain their credibility. The only time they don't have to raise rates anymore is if the market shows something which says, watch out. So yield inversion is one, and then they're kind of fixing it by increasing the rates, as unintuitively as it sounds. And I think they're going to keep marching on the rate hikes until they get to 2.25% is my guess. So another 75 basis points. At that point, I think, remember, the indicators they're seeing right now are all lagging indicators. We're already in a recession. They don't want to admit it. We're in a recession. And so by the time the next rate hike comes, I'm assuming 75 basis points. After that, I think that the wheels come off, and they're going to have to basically say, okay, we're going to put the brakes on or something. That's my guess. I don't think we get to 3.2.
I think you guys are very hopeful, but I think it's going to be much, much, much longer than that. I got to be honest. I'm going to ask you guys literally a yes or no answer. We're seeing forced liquidations now in crypto, cascading liquidations. Good times to be start dollar cost averaging, or lots more pain to come? Jordi, very quick answer. Do you think these forced liquidations are a buying opportunity? Or do you think that there's much more pain to come?
It's definitely a buying opportunity.
Awesome. Mark, what do you think?
I don't think it matters. If you're buying Bitcoin, you can DCA every single day of the year for the next 20 years.
No, I'm talking about Hex.
Sell all of your Hex, even if it's staked. Pay the penalty.
I don't own any Hex. I don't own any Hex. I don't own any Hex. Vinny, what do you think?
I think quality coins will do well. I think there's a lot of stuff that's been overvalued. If you look at, I always recommend pick a couple of coins, monitor it, look at the wallets that are selling, look at the wallets that are buying, at least understand your ecosystem of coins that you're trading in. I will say that there are a lot of coins that are oversold because of forced liquidations. So those are the ones that you probably want to buy into. People who put up collateral using certain coins, and those coins got wiped out. I have a couple that I'm actually in where we saw a massive wallet just be, smashed, and we found out afterwards that it was a forced liquidation. So I think I think the sellers are out of steam right now because the leverage has been wiped out of the system. So I'm with Jordi. I think it's a buying opportunity right now. And honestly, the other argument I'd use is that if the market drops below 19K for Bitcoin, we're so screwed anyway. That probably doesn't matter. So this is probably the bottom.
All right, listen, guys. Loved having you guys on. I think it was an amazing highlight for the show. I think we need to get you all on again. I'm going to also organize that debate between Richard Hart and Jordi and Mike together. It's going to be Jordi, Mike, and Richard Hart. We're going to have a beautiful debate. Thank you for coming on. Thank you for being part of the fam. We'll see you guys again soon. And Richard Hart. A beautiful debate.
Thanks, man.
Cool, guys. Thank you. Yo, Banter fam, before you go, don't go anywhere. There's a lot of announcements that I need to make. I want to talk to you a little bit about Sheldon shows and stuff like that. So, first of all, as I said to you before, get yourselves a VPN, because if you're not getting yourself a VPN, you're not protecting your crypto. You want to be protecting your crypto. It's cost you $3 a month to get a VPN. We use NordVPN just because of all the perks that they give us. And because they're so crypto friendly. So yeah, and we use it to mask our IP address, etc., which is a big thing. Next thing is, I don't know how many of you have been watching Sheldino Tentino shows. 6 trades for 6. Yesterday he traded again. He traded 3 coins. He traded three coins yesterday. I think they were all positive. I think one maybe hit a stop loss, but it was a raised stop loss. So the man is on fire. We unfortunately, we have to limit the number of people that can trade on that show and that can watch that show live. The reason why we have to limit it is because we're creating massive buy walls and sell walls, which becomes quite dangerous. So we're going to be limiting the number of people who can actually watch that show live. Some people will watch it live and the rest will be able to watch it streamed onto YouTube 15 or 20 minutes later. In order to watch it live, you're going to need a Banter NFT. The good news is that Banter NFT is absolutely free. So we don't charge you for a Banter NFT. So you get it for free. There's no minting fee. We're going to do it on Solana, so it's very, 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 very small. But you need to be an exchange holder with our referral links. So if you don't have an exchange account, you need to be an exchange holder with our. If you don't have an exchange account with our referral links, go and get one here. If you sign up to ByBit, you get up to $4,200 in referral in sign-up bonus. Sign up to KuCoin, you get up to $1,000. Sign up to Binance, you get up to $600. It's all here. Sign up with one of our exchanges. That's how we're going to drop you guys the NFT. That's the only way that you guys are going to be able to get the NFT. I have said to you, I've been using ByBit a lot. The more I use them, the more I love them. In fact, I've been doing all my buying actually on ByBit. I find it the best exchange. It has a derivatives market with big depth. It has a lot of coins. On the spot market, it also has a lot of coins. The interface is incredible. The interface is, I mean, for me, it's the best interface that there is. The execution is very, very, very fast. It's got everything you need in an exchange. And so the more I've started using it, the more I find it's a great one. You choose whichever one you want, but get that so we can drop you a Banter NFT so that you can use that NFT to enter Sheldon shows live. We haven't implemented that yet. We will be implementing it in about a month. So make sure you guys are out there. Also, let's do a KuCoin giveaway. Why don't we do a KuCoin giveaway? Here we go. So remember, if you've got a KuCoin account and you have money in the account, so this is not, we're going to limit the front running. Someone said it correctly. We don't want to do it. We don't want to make it exclusive. The problem is that if we don't, then Sheldon can't trade, because what happens is too many people front running. And then it becomes like, oh goodness, you can't trade, and then no one can watch the trades. And the only way to mitigate that is to have a smaller group of people watching it live. And so we thought about this long and hard, and we said, look, what we're going to do, we're going to create an NFT. It's going to be a Banter NFT. It's going to be on Solana. So there's no minting fees, but it's going to be like negligible minting fees. We're not going to make any money out of the drop. You guys can have the drop, but you've got to have an account and support us. Also, subscribe to our newsletter. If you don't know where to subscribe to our newsletter, on Sheldon's Twitter. Go to Sheldon's Twitter, follow him on Twitter because he's just got an amazing Twitter account. Also, hit subscribe here on the Daily Candle. You'll get our newsletter. Let's do a quick KuCoin giveaway, and maybe we can do a ByBit giveaway. What do you say? All right, so if you've got money in your KuCoin account, this is only if you've got money in the KuCoin account, you will get $1,000. I'm going to give away 3 today, and then let me get 2 today and 3 on Monday. So first guy, ti.com. If you've got money in your account, $1,000 goes to you. Let's go to page 2 just to make it a little bit more fair. Okay, while it is refreshing, maybe we should do a ByBit giveaway. Let's do a ByBit 10x giveaway. I'm only going to do one 10x. How's that? Only going to do one 10x today. Remember, all you need to do, you need to have money in your ByBit account. Then I pick an account at random. And today I'm going to pick account number 14,275. And I'm going to do a quick 10x giveaway. I'm going to 10x whatever is in this account. 14,275. That is the number. Whatever you've got in the account, I'm going to 10x up to $10,000. I don't give away more than $10,000. 14,275 was the number. Let's go back to 14,275. I always get so nervous here. 14,275. $72. So this person gets $720 into their account. What a pity. If it was any one of this, if this guy would have got $10,000, this guy would have got $9,888. Your name could also be here, and you could be using an amazing exchange. I think one of the best exchanges. And you support the channel if you use our referral links. All right, KuCoin. If you are ry.com, we know who it is. It's this account over here. $1,000 to you. We'll do 3 more of these on Monday. And I think today's been an amazing show. Like I must say, I really enjoyed the level of alpha. I'm really loving the alpha that we're getting on these Friday Banters. And they're all sponsored by NordVPN. So big thank you to NordVPN. But Vinny, I see Vinny calling me. I'll call him back. I'm loving the alpha on these Friday Banters. We're going to endeavor to bring you guys much more of this kind of alpha because it's just intellectually stimulating in the bear market. And I think we've got to a point now where there's no hype and there's no hot air, and it's just people talking straight facts. I'm loving it. I'm loving making these shows. Hope you guys are loving them. Anyway, I'll see you guys again on Monday. Hopefully I won't have COVID by then. I'm here. My bones are sore. I don't know if you guys saw. I took some medicine during the show. I was getting such bone aches. But I'm here bringing you crypto love and crypto wisdom because you're the fan. I'll see you guys again on Monday. Until then, trade well, my friends. Super fun. Mike, super fun, man.
Yeah, that was good, right?
Yeah, I loved it. We definitely have to get you back. I definitely have to get you back for